The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
We're going to hear now about two growth and income stocks that both have pretty impressive earnings surprise history behind them. That might just be part of the story. Ryan McQueeney is going to fill us in on the rest of the story on both of these.
Yeah, so we're here Thursday, October 11th. We're taking a big, deep breath after a pretty historic day of selling yesterday. Not necessarily record-breaking, but U.S. stocks suffering their worst day in 8 months since those February sell-offs yesterday, Wednesday the 10th. Gonna try to keep that in mind as we kind of look for places where we might find a rebound. And I want to start with McDonald's, which had previously been pretty hot. That's only part of the picture though, so to really describe that momentum, I want to look at the year-to-date chart for McDonald's. It has clearly been an up and down year for MCD, but the trend that really gets me is it comes down here in early March, and then it starts to make, there's rallies, but it starts to make higher lows, slightly higher lows every time it comes down. But that's a trend we really like to see just looking at the chart and thinking about nothing else, because eventually we pick up on that pattern and we see a rally really start to take off, and that's what we saw here over the last month or so. Obviously the selling yesterday pulled that back a little bit. I'll note that McDonald's actually fared a little bit better than some of its peers, some of the other big large cap iconic stocks out there. So with that in mind, and as we head into earnings season, I do want to take a look at its earnings outlook as well. This is the earnings estimate snapshot here. Looking for earnings, I believe the report is due on October 23rd, so less than 2 weeks from now. We're looking for earnings of $1.99 per share this quarter. That would be growth of 13%. These domestic, I mean, obviously it's an international company or global presence, yes. But a lot of these restaurant stocks, restaurant companies with footholds in the U.S. did benefit greatly from that tax reform. Obviously, McDonald's continuing to shift its business model a little bit as well. So we're seeing earnings growth here for McDonald's. That's that estimate calling for almost 13.1% growth on the bottom line. The real question mark here is the earnings estimate revisions. They've been mixed across the board, both for the soon-to-be reported quarter and the full year and the next year. We've seen the soon-to-be reported quarter's earnings consensus come down about 6 cents over the duration of the quarter, and then our earnings ESP is in the negative there. We don't love to see that ahead of the report, but as you said, pretty good track record here, and that growth still, we're seeing that tax cut effect still. I think it'll be interesting to see whether the sell-off, the pullback here over the past few days sets us up for a juicy earnings season. And that's kind of the story for the second stock as well.
Okay, and that second stock is Citigroup, and on October the 12th, which is tomorrow, Friday, Citigroup and other major banks report their earnings. Yeah,
so we talked about JP Morgan last week. This is one of the other gang of three huge big banks that report tomorrow. JP Morgan, Citi, Wells Fargo. PNC is in the mix tomorrow as well, and then it really kicks off a 3 or 4 or 5 day stretch where it seems like it's all banks and financials reporting, and then it's we're in deep in earnings season at that point. So like I did with JP Morgan last week, I just want to kind of preview the report that's going to come tomorrow from Citigroup. As we can see here, looking for earnings of $1.67 per share. That would be growth of 17.6%. So again, strong earnings growth here. Pretty solid estimate revision trend, definitely better than what we just talked about with McDonald's. The positive revisions outweighing the negatives, and the Zacks consensus trending 5 cents higher over the duration of the quarter. We do have a slightly negative earnings ESP, but that's not too bad. And as we can see, and as you mentioned, a really solid track record here. Hasn't missed since early 2015. It's just been a struggle to generate much momentum this year. I think, with the earnings outlook trending higher for this and the next year. And the share is pulling back a little bit ahead of the report. That might give us a little bit of room to breathe, a little bit of room to rally post earnings if they're impressive.
Okay. Do you own either one?
We do not. I do not personally. We do not have either. We do have McDonald's in the income investor portfolio.
Okay.
And I do want to say, as this is the kind of a growth and income segment, McDonald's 2.4% yield, Citi 2.6% yield right now.
Cool.
So definitely juicy dividends there.
Yeah, absolutely. And those are always the frosting on the cake. Thanks, Ryan. Don't forget, more stock information on our website, Zacks.com. Also, don't forget Ryan's Tech Talk Tuesdays podcast. It's on the podcast page of Zacks.com. And his Monday through Thursday live streaming video program, Free Lunch. You can see it on most major streaming platforms with Ryan. I'm Terry Ruffalo.